Most people think getting rich is a stroke of luck or a matter of flashy talent. It's not. Wealth is built quietly, brick by brick, year after year. And if you want 2026 to be a turning point instead of another year wasted scrolling, hoping, and dreaming, you need to do 3 simple things. And do them without excuses. Sit up. Pay attention, because one good idea properly acted upon can change your life more than 1,000 motivational videos you forget tomorrow. Most people spend their lives trying to impress people who aren't paying attention, buying things they don't need and wondering later why their bank account never grows. The world is overflowing with individuals living paycheck to paycheck, not because they don't earn enough, but because they refuse to control what they already have. The simplest wealth building rule has always been the one people resist. The most live below your means, and you'll rise above your circumstances. It almost sounds too simple to respect. Yet the majority choose ego over discipline, and the compounding damage slowly crushes their financial future. Imagine 2 people earning the same income. One saves 30% and invests consistently. The other spends everything to feel successful in public while quietly drowning in private. 10 years later, the first person has an investment snowball rolling. The second is older, more frustrated, and stuck exactly where they started. That gap didn't come from intelligence or luck. It came from the quiet, daily choice to spend less than you earn and let the difference go to work instead of disappearing into lifestyle creep. Every extra dollar you keep becomes a worker in your growing army of capital. And every unnecessary expense kills one of those potential soldiers before it ever fights for you. It's simply accumulated surplus. The higher your surplus, the faster compounding becomes your servant instead of your fantasy. But you cannot compound what you do not keep, and most people keep nothing in because they consume everything the moment it arrives. They confuse income with success, forgetting that real financial strength is measured in assets, not appearances. There is a hidden tax on modern life: comparison. People don't buy expensive things because those things serve a purpose. They buy them because someone else has them. Social pressure has become the most costly expense in the world. It pushes people into debt, into leasing lifestyles they cannot afford, into trying to look rich while sabotaging their ability to ever become rich. If you can eliminate your addiction to appearances, you immediately outperform half the population. The world rewards those who operate quietly and build steadily, not those who perform wealth to gain applause. The funny thing is, the ones truly wealthy rarely feel the need to show it. They understand the freedom money provides, not the image. Freedom from stress, freedom to make decisions without panic, freedom to walk away from a bad job, a bad deal, a bad environment. That freedom grows from the habit of consistently accumulating more than you consume. When you begin treating every unnecessary expense as a direct theft from your future opportunities, you behave differently instantly. Purchases slow down. Patience increases. Clarity returns. The strategy isn't glamorous. cut spending ruthlessly on things that provide fleeting satisfaction, and protect spending on things that add long-term value. Housing, food, transportation, education, and investments matter. Designer distractions do not, nor do gadgets that lose value the moment you open the box. One of the great advantages in life is realizing how few things truly matter and trimming everything else to the bone. Every dollar saved today is a multiplied opportunity tomorrow. If you are serious about financial transformation, you must break the nearly universal habit of adjusting your lifestyle upward every time income rises. This is where most people lose control. They start making more money and instantly find new ways to burn it. A bigger paycheck becomes a nicer car, a larger apartment, frequent dinners out, and subscriptions they barely remember signing up for. The extra income is gone before it ever lifts their long-term prospects. Lifestyle inflation is the thief that whispers compliments while cleaning out your pockets. If you make more money next year, but still save nothing, you have made no real progress. The ideal strategy is simple. Lock in a fixed lifestyle far below what you can afford and let rising income widen the gap rather than close it. When you earn more, invest more. When a bonus arrives, treat it as fuel for your future, not a ticket for temporary pleasures. A flat lifestyle and rising savings rate is how ordinary people quietly build extraordinary results. Wealth eventually stops being a mystery when you realize it is nothing but disciplined math combined with emotional restraint. The hardest part is psychological. Spending feels rewarding in the moment. Saving often feels like a sacrifice. But that is because most people measure happiness only in the current hour, not over a lifetime. The truth is the fastest way to reduce anxiety, fear, and exhaustion is having meaningful financial reserves. A cushion in your savings account buys mental peace in a way material purchases never can. Knowing you can handle a setback, a medical bill, a job loss, or an economic disruption without panic changes the way you sleep, the way you work, and the way you see opportunity. People with reserves see possibility. People living on the edge see only danger. The beauty of living below your means is that it works at every income level. A person making modest money but saving aggressively can surpass a high-income spender who wastes everything. The world is full of professionals with impressive jobs who are one paycheck away from bankruptcy because they operate like wealth is guaranteed instead of earned. Meanwhile, there are quiet individuals with modest salaries sitting on substantial savings because they mastered the one habit most refuse to practice. Consistency beats magnitude every time. If you want to test your relationship with money, try this. Go 1 year without upgrading anything that still works. No new phone unless the old one dies. No new wardrobe unless clothes wear out. No new car unless the old one collapses. Spend the next 12 months observing how rare it is to truly need something and how often purchases are made out of boredom or insecurity. You will discover quickly how much wealth you have been giving up to satisfy impulses that vanish within days. Living below your means isn't deprivation. It is strategy. You aren't eliminating pleasure. You are choosing greater pleasure later over small pleasures now. The choice is not between sacrifice and enjoyment. It is between short-term sugar highs and long-term independence. Anyone who has ever reached real wealth will tell you the freedom is worth far more than the trinkets they skipped along the way. Control your spending, and you control your trajectory. Protect your surplus, and you give compounding something to work with. Ignore the siren song of lifestyle inflation, and you build a future instead of renting one. The gap between want and need is the space where wealth is created. Build that gap as wide as you can, and let time multiply it for you. Most people want to get wealthy, but very few are willing to trust the one force that has actually produced fortunes for ordinary people for more than a century: patience. The modern world seduces you every day with noise, urgency, and distraction. You are pushed to believe you must act constantly, trade frequently, chase the newest fad, and beat everyone else to the next big idea. Markets have a way of humbling the impatient and rewarding those who understand a simple truth. Wealth is built quietly through steady investing, not heroic gambling. If you truly want your money to grow, you must learn to put capital to work and leave it alone long enough to do something extraordinary. Every generation falls for the same trap. They believe they are smarter than the last, convinced they can win by timing every rise and fall, buying right before the explosion and selling just before the crash. And without fail, the vast majority end up missing both. They get in too late, get out too early, panic after losses, and chase the next miracle. The reason is rooted deep in human nature. People crave excitement more than results. If investing feels too simple, they think they're missing out. But the truth is simpler than most want to admit. Disciplined consistency beats brilliant short bursts every day of the week. The markets operate like a quiet machine. 5 billion. They don't care about your feelings, they don't reward drama, and they don't listen to your predictions. They operate on earnings growth, innovation, global productivity, and time. If you own a broad slice of that engine through low-cost index funds or diversified investments, and give it enough years, you compound along with the world. That is boring. And that is the point. Boredom builds wealth, while excitement bankrupts amateurs who mistake motion for progress. If you cannot sit still while others around you get loud and emotional, you will never see what compounding is capable of. One of the biggest advantages you can give yourself is simply refusing to interrupt your own progress. The world is full of people who sabotage themselves the moment something starts to work. They panic at every correction, convinced the sky is falling. They sell when prices drop and buy when prices rise, doing precisely the opposite of what works. The market shakes weak hands loose, and those shares drift into the hands of calm, disciplined investors who understand volatility is not a threat. It is the price of admission. If you demand certainty, you pay for it with poor returns. If you tolerate uncertainty, the rewards are waiting. The single smartest habit anyone can develop is investing automatically and predictably, month after month, through good years and bad. When you invest this way, you turn volatility into an ally rather than an enemy. When prices fall, your dollars buy more units. When prices rise, your earlier purchases grow in value. Over decades, this steady habit outperforms almost all day traders, market timers, and sudden geniuses whose confidence evaporates when the world stops obeying their predictions. Steady discipline may look unimpressive in the beginning, but compound interest turns the ordinary into the extraordinary over time. Yet consistency requires something rare: emotional control. Human beings are wired to respond to fear and greed. When markets boom, we want a piece. When they drop, we want to run away. But wealth favors those who break that instinct. If you can think independently while others stampede in irrational directions, you gain a permanent advantage. You don't need brilliant insight into stocks, forecasts about geopolitics, or predictions about recessions. You need the humility to admit you don't know and the discipline to follow a plan even when the crowd is screaming in another direction. Most people don't fail because they pick the wrong investments. They fail because they don't stay invested long enough. They treat the market like a casino rather than a business they own. When you invest in broad markets, you are buying pieces of real companies. Businesses building products, employing people, innovating, solving problems, and serving millions of customers. Over long periods, that machine expands. Not in a straight line, not without pain, but undeniably. History is overwhelmingly clear that the patient investor wins, even if they never aim to beat the market. The irony is that the best investors spend most of their time doing nothing. They read, observe, think, and occasionally adjust. But they do not sit glued to charts and headlines. They understand most action is driven by ego, not reason. They know that missing a few years of compounding is far more damaging than any single market downturn. And they understand that markets are not designed to produce constant comfort. They are designed to reward those who refuse to quit during discomfort. If you want to dramatically improve your financial trajectory without increasing stress, adopt the mindset that every dollar you invest is a worker building your future, and every withdrawal from your long-term portfolio is a soldier removed from the battlefield before the war is won. Protect your capital and give it decades to grow. Compounding is slow in the beginning, almost invisible. Then it becomes unstoppable, like gravity pulling wealth toward those who respected the process long enough to benefit from it. Ignore the circus. Ignore the experts predicting doom or glory on television. Ignore the friend bragging about a crypto bet or the cousin who claims they know the next stock to explode. Anyone can sound smart for a moment. Very few can stay rich for a lifetime. The investor who keeps buying through every storm is the one who later gets to say, they got lucky. Though luck looks suspiciously like discipline multiplied by time. In the end, building wealth in the market is not a puzzle. It is a test of temperament. You don't win by being the smartest. You win by being the most consistent. Let the impatient gamble on immediacy. Let the headlines scream. Let the market wobble. If you simply keep investing and refuse to interrupt compounding, your future has a way of rewarding you far more than adrenaline ever could. Most people dramatically underestimate the connection between their income and their destiny. They obsess over saving pennies and clipping coupons while ignoring the one thing that determines whether they ever escape mediocrity, their earning power. You cannot coast your way to prosperity if your skills remain stagnant. In a world changing faster than any generation before, staying the same is the fastest route to falling behind. The most valuable financial decision you can make is choosing to become more capable, more informed, and more useful every year. When you increase your value, the world eventually has no choice but to reward you. There is a persistent fantasy that wealth comes from external forces. People wait for the economy to improve, a recession to end, a lucky break, or somebody else's approval. All the while, the real engine of their financial life, what they can do, build, solve, and contribute, sits underdeveloped. Income is not magic. It is a reflection of market demand multiplied by your ability to meet it. When you acquire a skill that solves meaningful problems, you instantly shift your financial trajectory. Average skills produce average outcomes. Rare skills produce rare opportunities. The marketplace does not care about your dreams, your needs, or how hard your life has been. It responds to value delivered and results achieved. Complaints pay nothing. Capability pays handsomely. The people who earn significantly more are not always smarter. They simply worked longer, studied harder, and pushed deliberate effort into learning skills others found too difficult, too boring, or too intimidating to master. If you want to rise, train yourself to do what the majority avoids. Every person who ever changed their financial situation began with a simple truth. Today's version of you does not earn the income tomorrow's life requires. If you want a better future, you must upgrade yourself first. That means reading obsessively, learning deliberately, seeking mentors, studying patterns of success, and relentlessly eliminating ignorance one subject at a time. Knowledge compounds just like money. A skill learned now will pay dividends for decades, often in ways you cannot predict. Most people stop learning the moment they finish school, and that is the tragedy. They freeze their earning potential at a young age and then spend the next 40 years wondering why opportunity never knocks. They fail to understand that education after graduation is not optional. It is mandatory for anyone seeking upward mobility. The world keeps moving, technology keeps reshaping industries, and those who refuse to evolve are replaced, outsourced, or ignored. Increasing your income is not about chasing titles or showing off credentials. It is about producing outcomes other people depend on. That might mean mastering a technical skill, perfecting a craft, understanding how money works, learning to sell, becoming a leader, or starting a business that solves real needs. The vehicle matters less than the transformation. When you become someone who consistently creates value, the world begins to open doors that used to feel locked. One of the most reliable paths to increasing income is simply learning what others fear. public speaking, negotiation, programming, data analysis, copywriting, selling, managing people, understanding incentives, 5 billion decision making. Each one of these skills can multiply your earning potential without waiting for permission. You don't need to ask anyone if you're allowed to learn. You do it quietly, consistently, and aggressively until your competence becomes impossible to ignore. There is also enormous leverage in entrepreneurship. Starting a business, even on a modest scale, forces you to learn faster than any job will. Building something of your own exposes you to harsh feedback, real competition, and the brutal clarity of results. You learn quickly what customers value and what they don't. You discover weaknesses you must fix, strengths that surprise you, and opportunities no job description would ever hand you. A small side project can turn into a meaningful income stream. A meaningful income stream can, over time, become a life-changing enterprise. The world today provides unprecedented access to information, tools, and platforms that enable ordinary people to build extraordinary careers. But increasing your income requires sacrifice, the kind of sacrifice most individuals are unwilling to make. It demands evenings of study after exhausting workdays, weekends spent practicing, while others relax, and months or years of effort before the payoff becomes visible. That quiet grind is where transformation happens. You can choose comfort now and pay the price later, or you can choose discomfort now and reap the benefits later. The trade-off is non-negotiable. Most excuses people cling to are simply signs they haven't accepted responsibility for their own capability. The economy is unfair. Opportunities are limited. Others got lucky. Stories like these feel comforting in the moment, but are devastating over time. The truth is always more empowering. People who grow eventually get noticed. Those who stay ordinary become replaceable. If you want higher income, stop arguing with reality and start mastering the levers that control your destiny. You also need to understand that your network becomes exponentially more valuable as your skills rise. People want to collaborate with the competent. Mentors choose the hungry. Employers promote the reliable. Clients refer those who deliver excellence. You must position yourself where opportunity flows, and that happens when you consistently demonstrate one thing. You create results, not excuses. If you dedicate the next few years to compounding your abilities, the phrase, "I can't afford it," slowly dissolves. Instead, you'll say, "How do I grow to create the income that buys freedom?" That shift is the real prize. Not the money itself, but the power to shape your life rather than be pushed around by circumstances. Income buys options. Skills buy income. Discipline buys skills. That chain is your roadmap out of financial limitation. Every person has a future version of themselves waiting to be built. The difference between a stagnant life and a thriving one lies in whether you choose to close that gap. Becoming more valuable is the only durable financial strategy that cannot be inflated away, taken from you, or lost in a downturn. Markets crash, industries evolve, and technology replaces roles, but personal capability compounds forever. Your income reflects who you become, and who you become is entirely within your control.